Military life means frequent moves, but that doesn't mean you can't build wealth through real estate. I'm Jason Wood, and today I'm showing you how to use the VA loan to strategically buy properties and set you up for financial success in the future. If you're active duty, you know that PCS moves are a fact of military life. Today we'll explore how to turn these frequent relocations into financial opportunities using the VA loan to set up you and your family for financial wealth. Whether you're facing your first PCS move or your fifth PCS move, these strategies will help to set you up for life. Before we dive into these specific strategies, it's important to know how VA entitlement works if you already have a house with a VA loan on it. Many service members believe they can only have one VA loan at a time. This is a myth. You can actually have multiple VA loans simultaneously as long as you have enough VA entitlement. So let's break down what VA entitlement is and how it works. So VA entitlement is the term used for the VA's guarantee on your loan. The VA loan program provides a 25% guarantee to the lender in case you were ever to default on the loan. So when we pull your certificate of eligibility and you have an existing VA loan, it will show us how much entitlement is being allocated to you for the existing home. It's a 25% calculation of that original loan amount. And it doesn't change as you pay the loan down. It's based on the original loan amount. So when you're looking to purchase another home using your VA loan, you can have two or more VA loans simultaneously. But now we need to understand the existing or outstanding entitlement and do the calculations to determine how much entitlement is available for you on the next purchase. It's very doable, and many of my clients have two, some of them even have three simultaneous active VA loans. And that's the key to PCS moves. And oftentimes, depending on what area of the country you're moving to and you're moving from, oftentimes you can buy these homes with zero down the first time and even the next time and still have two VA loans at zero down payment. So let's say you purchased a $300,000 home at your current duty station. This used $75,000 of entitlement. Now, based off entitlement calculations, assuming you're moving to a county with the same loan limit, we would have the ability to purchase a new home with a zero down payment of around $387,000. So depending on the area of your country that you're moving to and moving from, there's a lot of areas in the country where you can actually purchase homes in that sub $400,000 range, just in that example, and have a zero down payment. Now, that doesn't mean you have to always be sub $400,000 to pull this down. That's just an example based off the mean county loan limit average around the US. There are going to be some counties with higher loan limits where this math formula can change because you're in a higher cost county. So the first strategy of creating wealth through your PCS moves is keep the first property as a rental income property once you move out of it. This is often the most advantageous strategy when you've got PCS orders and you're being forced to go to another part of the country when you've already purchased a home somewhere else. So here's how you make this work. You need to verify what the current entitlement is that's outstanding or allocated towards you. So the way you do this is pull your certificate of eligibility, or your lender can pull that for you. We next need to calculate the maximum loan amount in the next county that you're moving to, doing entitlement calculations. Ideally, you'd rent out your current home plus a little extra so that you had some bit of a buffer there. Then we'd use your remaining entitlement to help you purchase the next home at the new duty location. This strategy has several advantages. It's the beginning to building a real estate portfolio. You've started with one rental property. That's how everybody starts. You got to start with one. You maintain ownership during housing market fluctuations, and you generate potential rental income if your area has a strong rental demand, which oftentimes near military installations, there's a pretty good demand for rental properties. And you get to build equity in two properties simultaneously because we just rented out the one we left. Now we're living in a new one that we just bought. We got two properties we're gaining equity in. However, there's some other important considerations you need to make sure you know. You need to be able to qualify for both mortgages. Now, incidentally, the VA loan will allow you to offset the mortgage on the departing residence with a lease agreement. So we're living in the house now. We got orders. We're moving out. The house we're leaving, we just need to get a lease agreement in place. And now, for purposes of qualifying on the next VA loan, we can eliminate that mortgage from your debt schedule. So you're not necessarily qualifying with two mortgages, because a lot of people would struggle to qualify for two mortgages, but we're able to offset one entirely with it being rented out. I worked with an Army captain who recently PCS'd from Fort Campbell to Fort Belvoir. Rather than selling the house in Colorado Springs, what he did is he decided to rent it out for $2,000 a month. That covered his $1,850 a month mortgage payment. Then he used his remaining entitlement to buy his new townhome in Virginia at the new duty station. 4 years later, in another PCS move, he rented out the house in Virginia and purchased another home at the new duty station because of his PCS orders. He now owns 3 properties. Sell and restore entitlement. This is strategy number 2. So in this instance, you would sell the house that you're living in now, completely restore all your VA entitlements. So now you have the full bandwidth of the VA loan. You can go zero down to any amount you qualify for going forward. And this is more the traditional amount. Sell the house, restore the entitlement. The process is pretty self-explanatory. We pull the certificate of eligibility, see how much entitlement is there, get you pre-qualified so you can purchase the next house, sell the current house. Your entitlement will be restored. Now at the next duty station, we can use the VA loan again and purchase a home. Where you might see this happen oftentimes is in markets where the current home you own does not have a strong rental demand, and getting a tenant in there might be challenging, or the rental values are too low and might make you in such a negative cash flow position that doesn't make any financial sense. So that might be an instance where you sell the house, or you're moving from an expensive market to another expensive market and you can't swing a down payment for any other type of loan program going into that new expensive market. So the demand of housing and the cost of the housing there just require you to sell one and buy the next one. One of the most important things when you're doing this, selling a house that has a VA loan and then buying another one with your entitlement fully restored, is getting the entitlement fully restored. So VA Form 26-1880 is the document that needs to be submitted to the VA for your entitlement to be restored. This can actually happen pretty quickly, but sometimes is overlooked. Well, we've helped a lot of clients who have done that, closed on a Tuesday on the sale of their house and then closed on the Wednesday for the purchase of the next house. And we've gotten entitlement restored in that short window of time. So it's absolutely doable. The third strategy is incredibly powerful, and we help a lot of people do this. So when you get that PCS order, before you leave the current home, we would refinance that house into a conventional loan, provided you have enough equity, which is the hope, right? That you bought the house several years ago, it's appreciated in value, plus you've been paying on it. So there's enough equity in there to refinance into a conventional loan. What this does is this frees up all of your VA entitlement. We can do a one-time restoration of your entitlement. Now all of your VA entitlement is available again, and you can go purchase at the next duty station. This happens oftentimes when we have people moving from, let's say, a base in Hawaii to maybe a base in San Diego. Both are super expensive housing markets, and you're going to want to have that VA loan for the next duty station because down payment would be big dollars. So we refinance the departing residence into a conventional loan and then stick a renter in there after you moved out and purchase in the next duty station using the full bandwidth of the VA loan with no entitlement attached. So you can go as high as you qualify for. Beyond the strategies themselves, there are several practical things to consider when you're doing a PCS move. Timing challenges. PCS moves often have a tight window. So that means you're going to have to move quickly between moving out or refinancing or selling the current home and then purchasing and closing on the next home. It's important that you're working with someone who's an experienced lender who can help you with that, and also very experienced real estate agents who can help you pull that off as well. The inexperienced lender and or real estate combination can really be detrimental to your timeline. So you want to make sure that you're building a team of the right professionals who know how to do this and have done it many, many times. Distance management. Now consider if you're moving out of your current house, but you're keeping it as a rental, then you want to determine, are you going to be able to manage it yourself? If you're moving across the country, you're absolutely going to need to implant some sort of property manager there to help you oversee it and run that property. Property management fees can range anywhere from the 8 to 10% range, which is 8 to 10% of the monthly gross rental income that would get paid to the property manager. The benefit of that is you can be hands-off, you can be off-site, you can be across the world, and that property manager can still handle your real estate for you. They're reliable for any of the contracts, any of the emergencies, and rent collection. Military clauses and leases. Now, this can be a really good strategic move if you're keeping your house as a rental property and it's maybe near a military installation and you want to rent to other military folks. If you put a clause in there that allows them to break the lease early only if they have PCS orders, this can be really attractive and invite a lot more opportunity in for potential renters. And this could be a really good strategy. Tax implications. Now you should consult with a tax professional first, but there's some tax benefits that you'll have by now having that rental property. You have potential capital gains exclusions, potential rental income reporting requirements, deductible expenses like depreciation, mortgage interest, insurance, and property taxes, and the possibility for a 1031 exchange down the road to help you defer any capital gains when you're selling one rental property and buying another one. Occupancy requirements. Now remember, the VA loan is only to be used to purchase a primary residence. However, you can leave your VA loan on the home that you're renting out. That is allowed. So you can leave the VA loan on the house you're departing and you'll get a VA loan on the next house. In that scenario, that is totally allowed. What you cannot do is you can't go buy a property that's purely going to be a rental, like you're never going to live in it. You can't do that and put a VA loan on it. It has to be your primary residence. Market research in both locations. So before pulling the trigger on any of this stuff, the first thing you do is your homework. Research the market or get with a really good real estate agent to help you understand the rental market in the current place where you live where that house is going to transform into a rental. And then likewise, in the new market that you're moving to, that home may in the future become another rental property for you. So as you're making that purchase, have the lens on that that's going to be a future rental property. Where I see a lot of people make a mistake is they'll go buy a house at the first house and then they feel like the next house has to be an upgrade. It has to be bigger, badder, and better than the last house. And they get caught in kind of the rat race without keeping the strategy of we're building a real estate investment portfolio here, not trying to outdo the last house. So keep that in mind as you're looking at homes and doing your market research. It's not about getting the bigger, badder house than the last one. It's about developing a real estate portfolio and making sure each home is strategically purchased to be a good rental. It likely will not be your forever home if you're active duty and you know you're going to PCS in a few years anyway. So here's a real life example of someone who's pulled this off really well. I have a client who is a Navy officer and he purchased his first home in Norfolk, Virginia using his VA loan. Through multiple PCS moves, he used the strategy of keeping each house and making it a rental property when he got orders for the next duty station. Today, he owns 4 properties. Initially, all of them were purchased with VA loans. He generates over $3,000 a month in positive cash flow, which covers all of his expenses on each of those homes. The key lesson here is by thinking long-term about your military career and using the VA loan as a tool to help you create a real estate portfolio, you can really create some financial wealth for yourself for the long term and tee yourself up really nicely for retirement. Now, we've had some clients who did the opposite and they didn't do their research. And they bought a house, not looking at the market, not looking at how it would rent. And then when it came time for orders, they decided to rent the house out anyways and move to the new duty location, only to find out the negative rental income was eating them alive. And so they ended up having to sell that house anyways. So it just goes more to the point of make sure you do your homework and do your research and you're purchasing a home that is going to be a good rental property. Remember, it's not the forever home. It's part of the real estate portfolio. We have to be creative also. So sometimes in some of these situations when you're getting orders, you may not be able to keep a VA loan on both homes. The purchase prices in the markets that you're moving to may just not allow you to use the VA loan 2 times. So you might have to do some strategy and refinance that current house into a conventional loan so you can free up the entitlement to purchase with your VA loan. We help clients out with this all the time, but understanding what these strategies are and how they'll impact you is super important because you're going to have a new payment, a new interest rate on that conventional loan. So we got to make sure that we've done the homework on the rental analysis to make sure that those numbers are still going to work for you on a cash flow basis. PCS moves are inevitable in military life, and that doesn't mean they need to preclude you from developing a portfolio of real estate or creating wealth. In fact, they actually should accelerate it. We are not in the economy of yesteryear where every promotion required a relocation with the big Fortune 500 company. Today, those types of jobs are a lot less frequent where somebody's being forced to move for their corporate job. But the military is one of the professions that still exists where you're being required to move all the time. So if you're smart and use some strategy, over a 20-year military career, you can accumulate at least 4, maybe even 5 primary homes along the path, really setting you up nicely for your retirement and creating a real estate portfolio that not only will have a large amount of equity, but provide you a decent cash flow on top of that. So each one of these strategies that we went over depends on your personal situation, where you're PCSing, what the markets look like, what your future plan is going to be. And I'm here to help you devise all that stuff. I've helped thousands of military clients with their VA home loan in doing things exactly like we discussed today in building this portfolio of real estate. So if you'd like to have some time to discuss your scenario or create a roadmap, click the link below to schedule some time with me or visit me online at valoanguy.us. If you found this video helpful, please give it a like, subscribe, and share this with a friend.